So I made little over $2,600 in one trade that I did on gold on my $500,000 funded account that I have with the Funded Trader program. In my last video that I did where I explained my FTMO trading strategy, I showed you guys that I am currently in a trade on gold and that trade was for the buy side. Now in this video, I am going to explain to you why I took this buy position, what was the amount that I risked, and where did I put my target and based on what reasons. But just before we do that, if you are new to the channel, consider hitting the subscribe button and turn on the notification bell. With that being said, let's deep dive into today's video. That's my entry right from here and my exit was right at the high area. This is the 4-hour chart. On the right bottom, on the right top, we have 1-hour chart of gold and on the left we have 15-minute chart on gold. I explained earlier as well in my previous videos that I like to trade with 3 different time frames. I start my analysis from 4-hour time frame, I move down to 1-hour time frame, and then I take my entry from 15-minute time frame. Now, what were the reasons which made me think that gold is getting ready to go up? I'm going to explain that in this video. So starting from the 4-hour time frame, always 4-hour time frame, we have this bullish market structure. Now what happened on 4-hour time frame few months ago, it does not really matter because you want to take the trade today and you're looking to take the trade from smaller time frame, either from 5-minute or from 15-minute time frame, because you want to day trade. So that much previous data, especially on such higher time frame, it does not really matter. So for me, if I am doing the analysis on 4-hour time frame, then I start from couple of weeks data. In this example, we have this much data here and we can see that market was going to the upside. We were creating higher high, higher lows, higher high, then higher low, and then after when we created this higher high, we broke the previous market structure, which was this higher high, also acted as a resistance. We broke this resistance and ended up creating a new high. Now on the 4-hour time frame, that's my first thing that I always do. Here we have the resistance area that market broke. The price from where market started to go up is right here and a new higher high area is right here. So that's the overall analysis that I like to do on 4-hour time frame. Because after this, I move down to 1-hour time frame where I wait for the market to give me a pullback so I can look for the trade opportunities. Keep one thing in mind. Always when you do the analysis, you find a trade opportunity, you see that market has broken the previous market structure, we are going for the upside, we are going for the downside. Always wait until market gives you a pullback. Do not rush out the process. Do not try to take the trade when market is already making a move. Wait until it finishes the move. It creates a higher high in case of buy and it creates a lower low in case of sell. Then wait for it to make a pullback towards the same breakout area from where it previously broken the market structure. Wait and analyze that pullback on the 1-hour time frame. So that's the reason why I'm going to move on to 1-hour time frame to show you how the pullback came and what kind of market structure I like to see on the 1-hour time frame during the pullback phase. So this is the market structure on 1-hour time frame. That was the breakout. Market started its movement from this circled area and ended up creating a higher high. Now, one very important point. When market starts to make a pullback, wait until it reaches the breakout area and it must come to that breakout area in a proper struggling way. Meaning during that pullback phase, if we are in the overall buyer's market trend, during that pullback phase from the sellers, there should be proper lower low and lower high sequence. So here we started to make a pullback. Right now, even on the 1-hour time frame, up until this point, this acted as a higher low. Because market made a movement, created a higher high. When it went down, it is supposed to create a high low if it will continue to go up. But when it did that, we got a rejection and that's what we needed because we are waiting for a proper pullback towards this breakout area. So when it started to make a movement again, now look what we are doing. We have this lower low on a smaller perspective. After this lower low, buyers went up, created a lower high and then sellers continued their movement as a lower low. Now right after we created a lower low, where we are now? We are at the area from where market previously broken the resistance when it was going up. Now whenever market reaches the breakout structure on the 1-hour time frame during the pullback phase, I always recommend wait for at least 2 proper rejections right at the breakout area from where it previously broken the market structure, which was also a resistance. Wait for at least 2 rejections. After the 2 rejections, then and only then move down to 15-minute time frame to look for the trade opportunity, which I will show you as well. So the first proper rejection we have is right here, because this was the price level from where market actually bounced to the upside. This may look like a rejection, but it's not really a proper rejection because buyers, they did nothing. Right after that, sellers tried to go down, they failed, and buyers made a strong movement. That was our first rejection. So we are going to mark down this rejection area. After this first rejection, sellers tried to go down. They created a fake out, also known as a fake breakout. It does look like market was making move down, lower low. Then we have this lower high. Then market tried to create a lower low, but it got failed because right after that we got a strong rejection from the buyers. So that means we have our second rejection right at our first rejection, which was also at the area of the previous strong resistance. This was the area from where we broke the resistance and went up to create a higher high. So this is the right time to move down to 15-minute time frame. The last part of this strategy is that when you move down to 15-minute time frame, we're not gonna randomly take the trade right after the second rejection, because we have double bottom now in case if we are looking to take a buy inside the buyer's trend. So that means after the double bottom, wait for just one more confluence, one more confirmation, which is going to be a third rejection right at the second rejection area, but on the 15-minute time frame. So this is the market structure on 15-minute time frame. We have this pullback that we were analyzing on the 1 hour time frame. This was the first rejection. Here we have our second rejection, and right after that I said wait for the third rejection. Now look at how market is reacting during the third rejection. It tried going down, but it got failed. Buyers showed a lot of strength, strong bullish candles. After that, market started to create a little bit of range. It went into a sideways movement on the 15-minute. So I ended up taking a buy position. My stop loss was just below the rejections, and my final target was at the higher high from where we started to have a pullback, which was right at this area. And look how well market made a movement to the upside, and we ended up making around 2.65 hour. My stops were there, and this was my target. Yes, 2.65 hour exactly. Now my overall risk on this trade was only $1,000. The reason why I only put $1,000 even on a $500,000 account is that I always recommend when you are trading with large capital, especially you are trading the funded accounts, because you get only 10% overall drawdown, or in my case, I have 12% overall drawdown. So that means your overall drawdown on the account is $60,000 in case of $500,000 account. So you do not really have a $500,000 account. Instead, you have $60,000 that you can lose. So I adjust my risk according to the amount that I can lose overall. So that's the reason I prefer to only risk 0.2, 0.3 or maximum up to 0.4% on the overall account balance, which is $500,000. So my $1,000 risk was basically 0.2%. And when the trade hit take profit, I made 0.5%. So if you continue to do 3 to 4 trades like this, and at the end of the month, after only trading 3 or 4 trades, you end up making $7,000 or $8,000 on a $500,000 account. That's enough money that you can use to make a living. Now, of course, the more money that you want to make, I recommend you should have more capital. So that way you can reduce the overall risk and maximize the overall profits. So I hope that you guys got to know that how I trade my funded account. If you got value out of this video, let me know in the comment section what lesson did you get from this trade. I will see you guys in the next video. Thank you for watching.